Sup traders, welcome back to Failure to Displace. So today we're diving into my morning routine with a live recording that shows exactly how I set up my charts and the levels that I use each day. So this was recorded on Monday the 25th of November, so it's going to show you how I start a week fresh off the bat. Plus I'll walk you through a live trade that I made during the first London macro. So this routine is the backbone of the new ICT kind of hybrid strategy that I've been developing over the past few months. And this is the strategy that's got me successfully funded on two 50k Apex funded accounts. So you'll see how I can blend ICT concepts that I've shared extensively on this channel before, originally through forex, with new volume and delta data. So adding this extra layer from trading the futures market has really improved my trade executions. If you want to follow along with my strategy and take advantage of the additional delta data that I'm going to be showcasing through the Tradeovate platform, then you can head over to apextraderfunding.com to grab one of their discounted evals. Just be sure that you use the code displayed at the top of this video, or you can check out the description to copy and paste it and ensure that you get the best price available. I know from my own personal experience, grabbing a cheap eval really helped me improve as a trader. Alright, so with all that covered, let's get into the main video. You can grab some coffee, get comfy, and we'll dive straight into it. Oh, before we do actually, don't forget to hit like, subscribe, and ring the notification bell as well so you never miss any future videos. Right, let's start with the live charting session now. Main chart here. So the first thing that I do on Monday morning is a big gap up. A large new week opening gap. So I'm using a new week opening gap, new day opening gap plugin on here. I've got the session liquidity tracker plugin, which is showing me Asia high, Asia low, well, any of the previous sessions, liquidity highs and lows. I've got VWAP, so I'm introducing volume into my trading now. So VWAP is a level that I will look to trade from. I then have displacement, which is showing me displacement candles. As an example, just had a couple of displacement candles here. They're highlighted in yellow, so these are larger than average candles. So it just draws my attention to price action if it does start moving quickly and aggressively. And then this top plugin that I've got here is the session volume profile plugin. So this is the plugin we're going to use initially. I have this set to show me the regular trading hours volume, so from 9:30 till 4 p.m. 9:30 in the morning till 4 p.m. New York time, and this volume profile is going to show me the value area high, value area low, and the point of control. So because we're Monday morning, this is going to show me the levels from Friday's trading session, which should be all the way down here. There's the session volume, so we can see that the volume was overlapping. So we had a consolidation day on Friday, and it was overlapping Thursday's volume as well. So that's Thursday's volume profile, and then into Friday. And so on my chart, I'll get rid of all of the drawings from last week. So you can see that I have several folders set up: previous day's value area, previous week's value area, and then any old point of controls that I've seen along the way, so I'll keep those on my charts as well. So we are going to be playing with the previous day value area here, marking out the high and the low. So in the yellow is previous day value area high, the point of control, and then from the bottom quite a small value area, and then we can lock that so it doesn't move. So we are well above Friday's value area right now. You can see what's left on my charts is a value area that I've marked out from Thursday of the previous week. So this is still there, and then we also have the previous week's value area up here as well. So we will now go and set the previous week's value area. So these are in blue. Let's unlock those. So to do this, we'll go to the 15-minute chart, turn off session volume profile. We'll grab the fixed range volume profile tool, and then we need to go back to Monday's, well, the start of the trading hours, which is there's the 4:30 crossover between Friday and then the new week opening there. So we'll just pull from there up to Again, the crossover 4:30 on Friday. Quite a consolidated week last week, we can see, which is why it was quite tricky to trade. So this volume profile is giving us the volume of all of last week. I'm going to drop to the 1 minute chart. The calculations are more accurate on 1 minute, which is why whenever I'm using volume profiles, I will drop to the 1 minute chart, because these levels are far more precise on the 1 minute. Now drag the value area low from last week down to the value area here. So again, this highlighted area, the lower area, is the value area low. Point of control and value area high. So there's our value area high, which is actually on Friday's high. Value area high as well, so that's the same level. It's all the way down here, so we can lock those off. We can get rid of that tool. So now we've got our value areas for the previous week. I aim to come to the charts at half past 1, which is where we're at now. And you can see we have swept Asia high. So when I usually come to the charts, the first thing that I'm looking for is I'm looking for the opening range, or the initial balance high and low. So this is from midnight open to half past midnight. So this would have been the initial balance low, which we've already taken. So that would be initial sell side liquidity. Then I will also mark out the initial balance high, which would have been here, for initial buy side liquidity. So you can see we open up this first half hour range. We've swept the high, broken down and swept the low. So that's the first trade that I'm looking for in the day, which has already played itself out before I've got to the charts. And you can see also a nice reaction from VWAP as well. So we're currently above VWAP, which is showing more bullish intent. Looking at range trading, as we did with the first opening range, sweep the high, then go down to sweep the low. We've now swept Asia high. I mean, my eyes are on Asia low, which is down here. So I do expect potentially a move through VWAP down to Asia low. And then we do have obviously the new week opening gap, which has not been tested yet. So as we opened this week, we've had a big gap up. So this gap is a draw on liquidity. We can potentially come fill that gap for a retest of previous week and previous day's value area high as well. Keep an eye on this high as well, and this low. So just setting our ranges. These are important because we're going to do the same setup now on S&P 500. And so this is ES. I'm doing the same setup on ES because I'm looking for divergence. So the first thing we'll do is we'll drop to the 1 minute. So I'm looking on 15 at the moment, drop down to the 1 minute on ES. Previous day's value area high. So ES is quite bullish. Look, it's breaking up higher. On Friday, it broke out of the Thursday range, unlike NASDAQ, which was stuck in the range. So that's value area high, point of control, and previous day value area low. Get those locked in. So we've already hit that level, the previous week's Thursday level, which I mentioned on the last one. We've traded through that now on S&P 500. So this was an untapped day, basically. We trended down in the market on that Thursday and not traded back into the level, which is why I've got those on the chart, because these levels may play a part in today's price action. I was expecting a move up into that area, and then I was going to look for trades from the value area high, value area low, etc. Obviously, it's just gapped straight through the whole range, so we may come back into that Thursday range, look for a short down again, feeling this is the new day opening gap. Come back out to the 15 minute. We're going to be looking for the fixed range volume profile, previous week value area. Let's just unlock that folder. So we've got previous week's value area low, previous week's point of control, previous week's value area high. So the chart setup that I've got, I have ES on this extreme right. In the middle is the 15-minute chart for NASDAQ. So this is where I can compare 15-minute S&Ts. So we've got SMT here. Essentially, we can see the high here of Asia. Taken out by NASDAQ, not taken out by ES. So we do have SMT at that point. You can see both are reacting from VWAP. It's a shame we missed that. If I was at the charts a little bit earlier, that would have been a really nice trade at 1 AM as we swept the Asia high and then broke back into the range, obviously with SMT as well. It would have been a real nice trade with that. So we're into a breaker block area. Now it's just a case of waiting patiently. NASDAQ with relative equal lows there on the 1 minute. And did that sweep it? Relative equal lows here. What's the, so I'm checking the low on this candle, which is 957.25. Equal lows there as well. Drop to the 1 minute on ES. We've got SMT again. ES is unable to take this high. So we've got SMT at this point with ES unable to take that high. Fair value gap here, which would be an inversion. What I'm noting, I've taken an entry at this point, I was too slow. So I'm using Tradeovate, and on Tradeovate I have this divergence candle plugin indicator. So what this is showing me is, it's not showing me whether these are bullish or bearish candles, it's showing me the delta inside each candle. So green candles are bullish delta, red candles bearish delta. The dots are showing me when there's a divergence. So this, you can see, was a bearish candle on TradingView. However, we have bullish delta. This means that there was more buyers in this candle trying to push price up, and it closed bearish. They were unable to take it through this level. So that, coupled with SMT, is a short trade. SMT in a breaker block with a divergence candle. Buyers trying to push this price higher and unable to do so. That is a good short. And we are at 45 as well. 45 minutes, I mean.
Order filled. Order filled.
Just opened up a trade by accident there.
Order filled.
This. Put a stop loss above the high. I'm expecting this breaker to take. We've got equal lows to target and VWAP down here as well. So I'm taking a short. I'm just going to mark this so we know that this was our divergence candle. We'll go one short here. Like a 5-point stop. So again, I'm bearish because I've got SMT. We've had that big displacement lower. Relative equal lows below us, relative equal lows down here. And ultimately the new day opening gap, having taken Asia high, take Asia low into the new day opening gap. It's 27 points low. There we go. We've taken our first level of equal lows, which means I will go break even. It's very aggressive to go break even at this point. However, we may sweep those equal lows and then continue higher. I'm hoping that we are just on the side of momentum now, so we'll just continue this displacement lower through to VWAP.
Stop
we're
filled.
Taking out break even at that point. So that was our inversion. This is what was giving me the indication to go short. We had another divergence candle. I didn't point that out, sorry, when I was messing around entering the trades wrong. That was a divergence candle in here. So it was a bearish candle, but it had bullish delta. So again, buyers were buying into this inversion fair value gap, trying to push price higher. And there was a large sell orders were pushing this down. So the way delta works and the way delta divergence work, as my understanding, delta's monitoring market participants, so people who are market buying in and out. Market buying in and out is generally done by smaller retail traders, so people like you and me, where we are FOMOing in. We're seeing a move and we're just trying to jump in on it. Bigger institutions and bigger players will generally use limit orders, which are not shown in this. So we can see that there was a lot of market buyers in this candle trying to push price higher. There was obviously a larger limit order here absorbing all of the buys to push price lower. So that's why delta divergence works so well. We can see what retail traders are doing by market buying into our levels, and if they are not able to get through there and candles close bearish, we can see that there's probably a limit order around here pushing price lower. You can see why I went break even. We've taken the relative equal highs and we are returning, so obviously we are very low volume in London like this. I'm aiming to try and get on board with these kind of moves where there's no pullback, so it will just run 10-20 points with no pullback. We are at 52 minutes past, so we are into the official macro now. Generated more liquidity here, so we have swept those, but we have generated more liquidity down here, look. So the other indicator that I've got on Tradeovate, as well as the delta divergence indicator, which is one of my main confluences for taking an ICT trade, I do also have CVD down here, so cumulative volume delta. So this again, it's doing the same thing, it's measuring market buys in and out, but I'm looking for divergence on this as well. So if we are making, it's showing me absorption. We can see here actually as an additional confluence, it either shows me absorption of larger players or it shows me if there's an area there's interest to make it go long. So we've got a new high created here, whereas the delta showed that there wasn't actually as many buyers interested in taking that level because it didn't make a new high. We had a delta divergence at that point. What I'm more interested in seeing is when we fail to make new highs in price, but delta is at really kind of rocketing. So if you see delta really climbing, but price is not moving, this shows that there's lots of market buying or market selling going on, and they're unable to move price. So we can see then that there is a limit order that's absorbing all those buys and sells. And generally, we'd want to trade in line with the limit order if we do see that. So that's what my CVD is for. It's just to show me again another area where potentially retail, smaller traders such as ourselves are on the wrong side of the market getting trapped. And this is quite a good example actually. You can see delta is dropping right now. And price isn't following. Our price is there, our delta has dropped significantly lower. So this is showing that we are having people trying to sell this, which is again illustrated by the divergence candles. So we've got bullish candles with bearish delta there. We can see that the bears are trying to sell this down, and there's a limit order around here buying it back up again. So now we've got CVD divergence at that point, which makes me cautious of taking this short. We are getting respect of our little inversion fair value gap breaker block. So this was another divergence candle. Buyers trying to push that up and unable to do so. But the divergence just has me worried. The ES is not doing anything. So on the 1 minute, I'm just checking the 1 minute chart, and ES not doing anything particularly exciting. In fact, ES has taken these lows We had SMT on the 1 minute down here. So remember, we've still got a bearish bias. I'm still thinking that we will come down for Asia low because we've swept Asia high. So this would be a CISD. We've just broken the low there. Looking at this as an order block now. If price is bearish, you would want it to respect the order block. Come lower for these equal lows. You can see on the 15, it's not very nice price action. High resistance. So I've left a little fair value gap inside that order block. I can get rid of this now because we're not in that trade anymore. It was break even. Into VWAP. That was the move that we were expecting. So unfortunately we got stopped out break even for that one, but that's what I was looking for off that inversion fair value gap. So maybe too aggressive with my moving to break even, given the fact that we'd created more liquidity in this area. I could have maybe just held the stop loss as it was. I don't like sitting for a long time through trades, but maybe that was the right thing. So now we've just got bearish move down through VWAP. So this is our displacement candle. We can see these large yellow candles are showing us displacement. That acceleration that we saw there is what I was hoping for here. As we came through this level, I was just expecting it to accelerate through these levels like that did, to take out the liquidity. Stops anybody kind of moving their stops to break even and such. So if they're long at this level, you want an aggressive move through these levels of liquidity to stop people being able to go break even or lock in any profits if they're on the wrong side of the market. And we didn't get that aggressive move there. It was prior to the macro window, so 150. The macro would have started, but I often like to get in at 45. You find that moves often occur at the new 15-minute candle open, which is why I was in a little bit early. We didn't get the aggressive move through all of the levels of liquidity until just prior to the open of the new hour. So I was in a few minutes too early, really. But the idea was right, which is good. The analysis was correct. SMT, divergence candles supporting the fact that we were going to go lower from a breaker block. Inversion fair value gap was created, which is where I was going short from. And we've already swept a significant level of liquidity, being Asia high, taking Asia high. Therefore, we expect the other side of the range to get taken out. Again, I'm just kind of looking at ranges. One side of the range to get taken, move to the other side of the range. That can be from the initial buy side to the initial sell side after midnight. Asia high through to Asia low. Value area high, down to value area low, back up to value area high. Expecting new day and new week opening gaps to get filled. Especially large gap like this, I would expect this to get filled today. Large inefficiency, so you would think price will be drawn back to that. Which would give us a bearish bias. It's important when you're doing this, we can easily get drawn into this on the 1 minute thinking, oh, we've got these highs, we've got these lows and that. Look at the 15. And the 15-minute range in the middle here is awful. So we don't want to get too carried away because we are just chopping. I mean, we've swept the 15-minute range lows. Almost, so we've created relative equal lows here where we had this CVD divergence. We're just trading from the low of the range back to the top of the range. It's just barcoding backwards and forwards. So again, this is why I've got the 15-minute on my chart, so I can kind of see where we're at on a slightly higher time frame. More market sell orders are happening in this area, but price is failing to close lower. It's closing bullish, showing us levels of absorption. So that says that the move lower might be taking a little bit longer. somebody's holding this up here, they don't want to drop it just yet. So I hope that was useful for you. That's the insights of how I'm using the various tools when trading prop firms on the futures contracts. Thanks for watching. Got any questions or comments, please leave them down in the section below. Don't forget to like and subscribe if you want to see more videos like this as well. I'll see you again in the next one.